I said one of the nice things about batting averages is that you could look at how they change over time. Likewise, we're not dealing here with ratios, but one thing which you can do is you can do something called a trend analysis to see how things change in a company. And the way the trend analysis works is you're going to establish something called a base year. The base year is the first year you're looking at. And then you're going to have the following years where you'd indicate your trend. So the way we usually set this up is the base year is going to be 100, and then the next years will be a percentage added onto the base year. So for example, see this 2035, see current assets here for Starbucks? The way I got this, and by the way, this is total current assets. The way I got this was 2035.8 divided by 1748 is 1.16. And here I'll show you on, oh, you know what, there's a calculator here. So here, if you were to do 2035.8 divided by 1748, you get 1.16, and hence the trend of 116. So most of this is worked out for you, but let's do non-current liabilities, common stock, and retained earnings right now. So for example, here, non-current liabilities would be 100, non-current for the base year. For the next year, it would be 950.1 divided by 992, or 0.9577. So that would be 96. And now do this for the remaining items. All right, so here you can see the numbers that I came up with. I didn't double check these. Do these numbers all look all right? Do these agree with what you got? All right, let's answer some of these questions together. A trend index of 130, like here, indicates the dollar amount is greater than the base year, whereas a trend index of 80 indicates the dollar amount is trend index of 80 indicates the dollar amount is less than the previous year or the base year. The base year. And be careful of that, because a lot of students confuse that and they divide by the previous year instead of the base. So you always divide by the base year. For the total assets, the trend index of 130 is computed by dividing 7360 by 5672. A trend index of 130 indicates total assets what? Increased by how much? 30% over a 3-year period. By 30% over a 3-year period. Now be careful. It doesn't mean 30% over 1 year. It means over 3 years. So based on this information, which of the following accounts increased at a greater rate than total assets? So total assets increased by 30%. Which items increased by more than 30%? Common stock is one of them. Let's highlight that. Did non-current liabilities, how much did non-current liabilities increase by? Only 90, it's 91, so it decreased by 9%. You follow? Because it's less than 100, so it decreased by 9%. The assets, oh, and how about retained earnings? Retained earnings also increased by more than 30%. It's because it's 179. It's more than 130. So the assets of this company are primarily financed with what? What item on the right side of the balance sheet is the largest? Retained earnings. Because if you look, liabilities is only $2 billion. The big item there is retained earnings. This is referred to as internal or external financing. Internal financing. Issuing stocks and bonds are a form of external financing. Wow, look at how much you know. Would you have imagined that you would have learned something today? Yes.
How is common stock increased at a greater rate when it's only 103? Wouldn't it have to be higher than 130?
Oh, it's not common stock. You're right. Common stock, because common stock is not higher than 130. Who told me common stock? You're wrong. Right? Because look, common stock is 103. The total assets increased by 1/3, didn't increase by, but had an index of 130. This is only 103. So yeah, you're right. Common stock isn't one of them. I was just blindly listening to what you're saying and copying it down. I've been in college too long. Sorry about that. And again, if I make a mistake, please correct me. I don't want anything to be on, sometimes it happens. Okay, Edmund Fang has sent me the list of names. Yes.
For the company that are primarily financed with retained earnings, do you look at the full year? Do you look
What year? You look at the most recent year. Because you're really interested in what's going on now, right?
Yeah.
You don't. So what if they were financed by debt 4 years ago? Right? We're focusing on now because we're buying the company now. We would make the investment now. What is the 3-year average total asset growth rate?
Okay.
30% is for 3 years. What's the average growth rate per year? Yes, 10% per year. So therefore, what would you call this? Would you call it low, moderate, or high growth? Say it again. Moderate. This is per year. It's 10% per year. So that's 5 to 15% is considered to be moderate, and this would be considered to be moderate level growth. Which surprises you, right? Because you think Starbucks is a hot stock, kind of. And we're going to pass on this. Let's go to the next thing, common size statements. I like this better. 341. Yeah, let's go for it. Because we don't want homework, right?